Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Ira Epstein of Lynn & Associates with your metals market update for this Friday, and this is the weekend edition of your metals update for Friday, and we're now on the 22nd of December. It's hard to believe, 2017, and we're about just after 1:20. And yes, I'm putting this out early, and no, these don't necessarily represent the final settlement prices, but believe me, they're just about right here. I was looking at that before we go. Always remember, at 12:30 p.m. Central Standard Time, the settlement price is determined, but the market trades till 4 p.m. Central Standard Time. The news over the weekend is going to be the wildness that you saw in Bitcoin. Be ready for that. Now let me say something to all of you. I want to wish you a Merry, Merry Christmas. Happy holidays to everybody. Drive careful. Take care. It's really that simple. We've got a whole year ahead of us, and January is going to be exciting as can be. Remember, at the end of this particular video, as I get into everything, I've got a special on my charting course that lets you have it for a substantial discount, and here's my guarantee. I'm not able to predict things. When I raise the price after the first of the year, it'll be higher than it was before without the discount. So it's a great deal for you. It's an online gift. Buy yourself something. We're talking $79.95, not a lot of money. All right, let's go to the gold chart and see what we've got. The first thing that's evident on a monthly chart, we've been stuck against this 18-month moving average of closes for most of the year. I think you'd agree with that. If you don't, look at the chart. Yes, you had a pop and you did get up here, but you fell right back and you've been sitting for month after month at this level. Momentum is flat. The pattern is one of lower highs and lower lows, but for the month, because you're up here at 1276.30 and that is over the monthly moving average of 1263.60, the two negate each other. So I feel that you've got a market on a longer term picture that isn't done anything. It's just sort of sitting. When we go to a weekly area chart of closes, this has been in a down mode. The high close was 1347.30. The low recently was 1245.20. I realize some people come out and they go, Ira doesn't know what he's saying on gold. I don't care what you want to think. You can't get away that the market from September until December fell $100 an ounce. That's not an uptrend. So the market has to get back over this rally high on a closing basis in order to say this pattern is over. Right now, the resistance is the 18-week moving average of closes, as I define it at least, at 1286.80. When you come to a weekly bar chart, the market has gone into a state of a big decline. It is not trending. Now, let me define how I view a trend, and then you can take it from there. I can see that the slope of the market is down, but I define a downtrend as lower highs and lower lows in succession. When you have a higher high and a lower low, that is not a trend. It's nothing. I then look to see where's the market trying to grab its footing. The 100-week moving average of closes, you slid through, but you didn't quite make it to the 200-week in this bright, or let's call it a dark gray color. See that? So that's been your support area. What might have been support on the way when you peaked and came down, the red line, becomes resistance when you go back up. So I'm looking for that resistance at the 18-week average of closes. When I put the Bollinger Bands on the chart, they've done their job. They've restrained the market on rallies, given you a zone where the market might peak, and on the break just now, it offered its support. Bollinger Bands will keep a market trading within them 95% of the time. When they compress and go sideways, what happens is, in order to break into a trend, they have to go either through the upper band or through the down band in rapid succession. It will be literally week after week. It's not happening right here. So I'm still viewing this as a market that's caught sort of in the middle of what I showed you in the monthly chart, not in a big picture. When we come to the chart with the Bollinger Bands, the moving averages and the slow stochastics, momentum has changed. The momentum is now pointing up. So the odds figure that if the market keeps that momentum and it can rally, maybe what was in the past support and resistance, the 18-week average shows itself again. In the Bitcoin, this is a 15-minute chart. I just love showing it because the action is interesting as can be. Number one, take a look at your Bollinger Bands, both spots. Remember what I just said from sideways action? And I would view that as sideways action right there. You're looking to see if the market can break out. And if it does, be it on a weekly or a daily chart, it'll push that band like it was doing here, be it to the downside or the upside. It also did it back here, and prior to this was sideways action. Go on the charts, you'll see. I teach this in the charting course. And what you're looking for, what is momentum doing? If you believe, as I do, that momentum leads price, momentum on this chart got itself locked into an upside, and now it's losing that, turning down. The first position could be what happens at the 15-minute chart. It's so hard to say that. The 15-minute moving average. We'll find out. That's of the closes of those 15 minutes. On a weekly chart, you can see that the momentum is turned up here. Not bad at all. And that's, by the way, GLD. It is fighting at the 100-week average. If it rallies further, then I'll argue for the 18-week average. On the mining stocks, the resistance is rather pronounced at 23.35, the 100-week, and 23.14, the 18-week average. Momentum is up. There is no trend. You have a higher high and a lower low. But go to silver, you have a downtrend. Lower highs, lower lows. You hit the lower Bollinger Band, found your footing, you're bouncing. That's about all that I could say. Resistance back up at these levels. When I come to the copper chart, copper got a big boon. And the boon was the tax bill in the U.S. combined with China saying it's going to ease credit, not do the credit tightening. It had been for a year. That combination might make China buy even more copper, durable goods items and the like that they'll manufacture. In the U.S., the tax break, in theory, puts money into everybody's pockets. I mean, it's sort of strange. AT&T and Comcast both announced as soon as the president put out the tax bill, or the Congress passed it, rather. He signed it today, but Congress passed it, that they're going to give, as soon as the president signs the bill, $1,000 to each of their employees. That I think they're not managerial, but it was 200,000 people at one company, so you'd think that's a lot of money. You better look and see how much money they save a year because of the tax bill. You'll be shocked. Lower low, higher high, sideways action, caught in sideways Bollinger Bands. Admittedly, it's just come from 292 all the way up to 321, but you're into a resistance area. In the platinum, not trending. Higher high, lower low, found its footing at the Bollinger Band. I would expect to see resistance attempted at the 18-week average of close. Momentum is pointing higher. Palladium has been the strongest of the metals, just the best looking chart. It's got higher lows, higher highs, riding the upper Bollinger Band, and momentum just locked in and bullish. In the dollar index, we have turned the dollar index into a bearish environment. It's got lower highs, lower lows, momentum's pointing down, and you're under the 18-week moving average. To negate it, you got to get over 94.21. If the momentum and the bias continue down, you might go to 91.30. So you put it together, you have a game plan of maybe we're getting that year-end rally in the metal markets, which often happens if you're a believer of seasonal studies and you look at them. Go to More Research Center, Inc. You'll be able to see all the products they have. They have a play in gold at this time of the year, too, that starts coming up, I think, the 26th. So you want to take a look at those. But as I said on my charting course comes with videos of 6 hours that are going to teach you my swing lines, the moving averages you see me talk about. Obviously, it's going to go into the Bollinger Bands, the slow stochastics as I deal with them, and then another study called window envelopes, a profit-taking tool. I teach this in a different way that you've seen. I give it my own twists and turns. I have been fortunate. I used to over the years, I've had many, many TV shows national, not just talking CNBCs and the Foxes, I'm talking many. And I used to have a show years ago called Stocks, Options, and Futures where I'd interview John Bollinger. I'd interviewed George Lane that did stochastics, Robert Prechters. I can go on and on, the Joe Granvilles, all of the greats. And I learned from them. I was the guy behind the scenes that could ask questions. They'd sit down. They were happy to be on the show and get the exposure. And I bring to you what I learned over that time frame. The course normally runs $109.95, and it does include $99 worth of charting software and my trade recommendations if you haven't had them before. Let's assume that at that point, you didn't take the course. If you were to buy our charting software and my recs, and people buy a lot of those, what happens is you'd be paying $160. It was $109.95. Now, for just this Christmas spell, if you use the words XMAS in the coupon area of our course, what you'll see is it's $79.95. And here's a guarantee I can make you. I'm going to raise the price after the first of the year without what it was at $109.95 to higher than that. So if you'd like to get this, you can either call my staff. If we're not here over the weekend, okay. You can go online. If you buy it there, it's really easy. Go to our website, go under the word education. You'll see Ira's charting course. Just click it. You'll be able to read all about it before you commit yourself in any manner. And yes, if you buy it and you want us to start it after the first of the year or whatever, we can work that all out for you. Not a problem. Want to give it as a gift? We'll call up. Say, this was bought to you. Thank you for doing it, and tell the person what they've got, and then they'll get their emails and everything how to do it. You can click up here if you're watching me on YouTube. That's another way to do it. It'll take you right with that link into the course area where you find out all this info. In the meantime, happy holidays. I will see everybody on Tuesday. Enjoy the holiday.